what's the insurance market for staffing firms look like today? And it's a much improved market than what we've seen over the last few years. And really, in terms of leveraging what you're doing in the marketplace to compete not only with your local competitors, but certainly with the nationals, how to improve your position by streamlining administration and really using what we're calling your ACA coverage to help you attract and retain talent. So with that in mind, let's go ahead and look at what is happening with the ACA on the next slide. Really in its current form, the ACA is pretty unsustainable. The real problem right now has to do more with the individual market than with the group insurance market, the employer marketplace. But it's such a huge problem that we really are dealing with an unstable health insurance market when it comes to buying individual coverage. But there's still a lot of gridlock in Washington. And while I do believe it's very likely that Congress will pass something, the idea that Republicans can really gather enough votes is very, very questionable. It changes almost daily. We're not going to see a full repeal of the law in almost all certainty, because to do that, there really has to be enough votes in both the Senate and the House, and they're not there. So the Republicans are using something called the reconciliation process, which really only requires a 50 or 51 vote majority in the Senate as opposed to 60 votes. And if the Republicans can just get it to a 50-50 tie, then the vice president will break the tie on that. But the reconciliation process only allows Congress to deal with items that really affect the budget. Now that can be taxes, anything that's revenue related, or it can be expenses. But even with passage of that, if we see something, we're very likely going to see status quo for 2018, because we're just getting too late into the year to see major changes occur. And of course, in very short term, we're going to be into the midterm election cycle, which creates a lot of issues, because the Republicans, believe me, are going to be under attack by the Democrats no matter what they do. So if the Republicans pass something, and we can go ahead and advance to the next slide, David, what we're going to see is probably going to look a little bit like this. Both the employer and the individual mandate, actually the penalties will go away, because you can't repeal the mandates themselves without repealing the law, but the mandates will go away if the Republicans have their way. And the subsidies that exist today for individuals will probably be replaced by tax credits. Now, those credits may be based on a person's income, they could be based on age, or they could be both. The House version and the Senate versions of the bills differ, and that'll have to be worked out. Pre-existing conditions will still be covered, but as the bill is written today, only if individuals maintain continuous coverage with very short gaps in coverage. Now, what that means is if a person has coverage and keeps coverage, whether it's through an employer plan or through an individual plan, or if they have an individual plan and then get onto an employer plan, it really doesn't matter. As long as they're maintaining coverage with minimal gaps, they'll be able to have coverage for pre-existing conditions. We'll have the exchanges surviving, but they will be more a way for people to buy individual coverage as opposed to applying for subsidies. And the types of plans that we're likely to see are going to be just as high deductible plans as we've seen today, and probably as expensive, if not more expensive, at least for the next few years. Projections are that if we can stabilize the individual health insurance market, we will see an eventual drop in prices. But this is going to work to put more pressure on employers to maintain their plans, even if the mandate penalty goes away. We may see, and I think it's very likely, that all of the strict requirements to have everything built into the health insurance programs called essential health benefits probably go away. In fact, we may see a return of the non-hospitalization major medical. I'm sure most of you remember a few years ago when the IRS basically said, okay, we've seen these plans come out that don't cover hospitalization. They're no longer going to be able to meet the definition of a minimum value plan. And I think that may come back. Whatever happens, it does appear that we're still going to have to be reporting coverage requirements and your ACA reporting that is such a problem. I just don't see that going away at all. Ultimately, we could very well likely see in the next few years health insurance turn out to be purely voluntary options where the employer is not required to contribute at all. And we could see a wide range of health insurance plans available that I do think would drive down costs, particularly for people who are lower wage workers. So what's this mean for the health insurance market? Going on to the next slide. Well, as far as staffing is concerned, we've really seen more options develop than many expected. I'm sure most of you can think back 4 or 5 years ago when there were some very loud voices in our industry saying nobody's going to write you, just pay the penalty, and by the way, buy this indemnity health insurance plan that doesn't really qualify as health insurance that my company is selling. Well, we've seen a lot of options develop. Many of them are good, but not all of them are. Some of the options that are being marketed to staffing companies are now under regulatory scrutiny and review. I'm not going to name any by names, but some are under Department of Labor investigation. In the last few months, we've seen some of those options be issued cease and desist orders in certain states. I hope that none of you are covered by any of those, but you do have to be really careful with what you're buying out there. And the most important thing I'd like to have each of you try and remember in that is when you get into an insurance program or an insurance-like arrangement, insurance is a contract, and so you need to really be aware of what your contractual provisions are. Like I said, there are really a lot of good options. Most of the good options are partially self-insured. Notice I didn't say self-insured, I said partially self-insured, and that's because your exposure is capped. I would advise you to stick with industry leaders, and by that I mean use a broker or an agent who is really well known in the staffing industry. Make sure that you're dealing with companies that the industry knows and that they know your industry. I think it's extremely important. Now, the last couple of years, we've seen these options, these health insurance options for ACA compliance develop, but they were very messy in terms of administration. And that's because we were really seeing the creation of programs that were really designed to become, help you become compliant. And many of the platforms that these programs were written on were not tested. But the dust has mostly settled, and we've seen most of these programs, administrative issues really settle down. Now, if and when Congress does make changes, and we're very likely to see that, then one of the downsides is we're going to see a chaotic insurance market again. You're going to see health insurers really scramble to unwind all of the changes they put in place over the last 4 or 5 years. You're going to see more administrative hassles. You're going to see a very clogged pipeline in terms of getting quotes. I wish it would be different, but my prediction is the more change, then the more chaos we're going to see for those types of arrangements, those new arrangements. The next slide, let's talk about what options are out there for staffing companies. And I'll go through this pretty quickly. Most of you know that certainly the Skinny Mac is available. It's still there. And we've seen Skinny Mac pricings really go down. We've got vendors now that can price that as low as $4 per week. Non-hospitalization major medical plans. Now, this doesn't meet the minimum value requirement, but it's still a good option for low-wage workers, and it provides more value than the Skinny Mac. We see those priced as low as $20 a week. And then the minimum value plans, the full hospitalization plans, in some cases, we've got vendors that have those at all the way down to $34 a week. Practically every option that we have, at least in our firm, has zero minimum participation requirements for the MVP plans. So these are all really great developments that have occurred in the marketplace. We also have some vendors that will do weekly premium administration. But for most of you, I really don't advise that because it can be so problematic. It requires a significant amount of hand-holding by somebody on your staff and a lot of reporting back and forth every week. But it is available, and so if you have the ability and the desire to get into weekly premium administration and you can really pay attention to it, to make it work, it's out there. We also have vendors that will bill in arrears and some that bundle in ACA reporting services. One big trend that we've really seen, particularly if you're a large enough staffing firm, is to combine your good claims experience from your temporary plans, because they are running at really low claims rates for contingent workforces. Combine that with your internal staff plan. And the benefit of that is by combining the plans into one, you would still offer separate benefits to your internal staff and your temps, but you can actually have the good claims experience of your temporary population end up subsidizing your internal staff. That can be a goldmine for you because that can really lower your cost. And you probably will continue to read a lot about captive insurance programs. They've become very popular. Don't be afraid of those. They're not like the workers' comp captives where you have to have very high capitalization requirements and long tails. They're really turning out to be a good way to manage your ACA and health insurance risk. Now we're going to kind of launch into, but my whole point here is that there are so many options available, and no one particular option will fit every need, and that's really because each staffing company may have a completely different strategy in terms of what they're trying to accomplish with the ACA, and that can run the full range from compliance only to trying to offer full benefits when you're in more of an IT or professional staffing situation where you simply want to offer stronger benefits for whatever reason, to everything that maximize talent acquisition. So when you're choosing and looking at ACA options, simply keep your strategy in mind. Now, the next slide, we talk about the strides that we have made in terms of employee benefits administration. And the first thing I have to do is I have to own up to the fact that if I had the last 5 years to do over again, because I have done a lot of webinars, I've done a lot of public speaking in the staffing industry. I'm a former staffing company owner, so I understand the industry better than most people who do what I do. The thing that I would do would be right up front is be very vocal in suggesting that each staffing company really has somebody on staff who understands employee benefits administration. Most staffing companies simply haven't had that. Now, if you're a larger staffing company because you have enough internal staff to warrant having somebody on board who does that, then you fared better over the last few years. But if not, then you've probably really struggled with administration. A rule of thumb is based on the number of eligible employees, anywhere from around 250 plus or minus, you should have at least a part-time person who is dealing with benefits administration. And certainly by the time you hit 500 eligible employees, that's probably a full-time position. The sad part is you may only have a very small number of employees who actually enroll, but the real transactional effort that somebody's going to make really is driven more by the number of eligible employees. So that's the one thing that I'd really like to advise everybody to do, is really pay attention to having enough internal resources to manage your end of these ACA plans and do it effectively. Now, certain functions can be outsourced, but certain functions cannot. Your employee benefit plans, whether they're your ACA coverage or others, are governed by a variety of both state and local laws, and some of those laws place obligations on you, the employer, fiduciary obligations. And if those obligations are not handled correctly, then those of you who are owners can find that your personal assets can be at risk. So it's a really important part of the program to pay attention to. Your risk, your greatest risk, is not having more people sign up on the plan than you thought. Your greatest financial risk has to do with not being in compliance. So make sure you have the internal resources necessary to do that. So moving into the next slide, we're going to talk a little bit about why it's important that you pay attention to the administration and why you have to have resources. The first thing we want to talk about is a little bit of the workflow of once you have any employee benefit plan put in place, what has to happen. And this is true whether it's health insurance or group insurance of any kind. Well, first thing, eligibility has to be determined. And as far as health insurance goes, the ACA only gives each employer two choices for determining who's eligible. And one is called the monthly method, and the other is the look-back method. Once eligibility has been determined, then employees have to be notified. They have to be offered an opportunity to enroll. And then, of course, each employee is either going to enroll, they're going to decline, or they're going to do nothing. And in the staffing industry, the third category, doing nothing, is where we see most employees falling. But those enroll, certainly those enrollments have to be communicated to the insurer, and things have to be entered into the insurer's system. Payroll deductions have to start. ID cards have to be issued. Invoices are generated, and premiums for health insurance are always due in advance unless you have special arrangements. So, for example, your August health insurance premium is due to the insurer by August 1st. So premiums have to be booked by the insurance carrier in order for them to have coverage in effect on that date. And of course, you also have ongoing changes. People drop the plan. Somebody has to tell the insurance company who's dropped and why. The reason why somebody's dropped coverage is very important because it could be a COBRA event or it could not be a COBRA event. And then, of course, you have the COBRA administration. So there's a lot of moving parts that an employer has to do with any employee benefit plan. So in the next slide, we're going to talk about what challenges does this pose for staffing. Well, as you can see, we've practically replicated the bullet point list from the previous slide. And as staffing company owners, I don't have to tell you that this has created a lot of effort that you really weren't prepared for. You've got challenges in dealing with almost every one of those bullet points, including tracking of those cotton picking ACA forms, getting the invoices paid without having to float the employee's share, and making sure you get all of the changes updated and handling everything ultimately and by staying compliant. So how do we deal with this? Well, if we go on to the next slide, one of the things that we've made great strides in is simply, and it really is kind of simple once you get down to it, is the use of technology for employee benefits administration. Now, I'm not talking about technology to simply enroll employees in online enrollment. I'm talking about a true employee benefits administrative platform. And we've seen a lot of clients move to what we call employee self-service for enrollment and managing their own changes. And basically, that's being used for both internal staff plans as well as for field staff. Now, with this type of an arrangement, there is an online and oftentimes a call center platform built in where employees are basically told, go on and view your benefits, enroll, waive your coverage, manage your benefits. And I realize that not everybody has access to the internet, but we're seeing more and more staffing companies do this and being very successful at it. It is a huge time saver. It can cut the administrative time that your internal staff is spending on ACA administration by half. And you can do your own math. You can see how much is 4 hours per day per the number of employees that are involved in ACA worth to you. It reduces paperwork. It really streamlines the enrollment time. And one of the biggest things is it appeals to the generations that are now making up the largest segment of the workforce, the Gen Xers and the millennials. Bottom line, it also results in better enrollment decisions by the employees. So there are good employee benefits administration systems that are out there, and believe me, I was one of the skeptics that staffing employees really would or could use them, but it's happening. We're seeing it from the nationals. all the way down to the smaller staffing companies. It's something that I really want to encourage you to look at. So if we go on to the next slide, there is a way to simplify this and reduce your administrative time on this. And part of it we just talked about, and that is using an online employee benefits administration system. But also, I really encourage all of you to take a look at your processes. You're as much as you can outsource, do, but you're still going to have somebody internally manage the entire process. We strongly recommend that you stay away from the look-back method. It's mostly misunderstood. It's mostly not used correctly, and in an audit situation, it leaves you tremendously exposed. The monthly method is a lot simpler, and it basically involves offering coverage to everybody, and you're still not going to see very many people take the coverage, so it doesn't really increase your financial exposure, but it really simplifies things for you. Also, with the right system, the right employee benefits administration system, you can literally integrate your payroll system with the benefits admin system and have direct file feeds of eligibility going on a weekly basis. So each new employee that comes up each week as a new payroll record is simply identified as a newly eligible employee. Now, not every benefits administration vendor out there does a really good job with staffing. There are a lot of ben admin vendors, as we call them, that are in the marketplace. Employers of all types, not just staffing, have been moving rapidly to increase their use of technology. And the majority of the vendors that you're going to hear about or may knock on your door, your broker may talk to you about, really don't understand staffing. But there are some out there that really do and do a good job. And we know who they are. If you're having trouble finding somebody, let us know. We can direct you to somebody. But there are vendors that have absolutely dedicated staff just to working with staffing companies, and they know your business. We suggest moving to a process where you're actually making your offer of coverage during the onboarding process. We suggest you may want to have some type of an employee consent form or acknowledgement form, and you may want to consult with a labor lawyer to make sure that's constructed properly. But this way, if you can make that offer of coverage before the employee ever gets their first assignment, you don't have to touch it again. And when the employee goes on assignment, that payroll record I was just talking about a few minutes ago goes directly into the employee benefits administration system as a new employee, and the employee's elections can be pulled from the database from when they were first onboarded, and then coverage goes live at the appropriate time. You don't have to chase the employee to when they become eligible this way to get them to sign some type of a form or turn something in. They've already done it. And one of the things that we're seeing a lot of employers do is basically pushing employees into the lowest cost plan if they fail to respond at the employee's cost. So there's no cost to the employer for this. You basically automatically enroll an employee who doesn't enroll or decline coverage, and then force them to waive coverage if they don't want it. And again, it's at no cost to you. Also, consider working with a vendor that will bill you in arrears, and think about when are you going to payroll deduct for this. A lot of staffing companies have found themselves in a position where they're having to carry an employee who doesn't work the full payroll or the full weeks in a given month, so they don't have enough payroll deductions to cover a monthly premium. But I have some clients that take the deductions the first 2 pay periods of the month, for example, or depending on the cost of the plan, you may want to take it all up front or simply deduct it far enough in advance so that you've got the money from the employee prior to the premium having to be done or having to be due, excuse me. Because no matter what you do, you're always going to have somebody who you can't get money from because they missed a week's work, and it's kind of like breakage in retail. So you're going to have to plan for that. You have to budget for it and build your processes to help streamline that as much as you can. So let's go to the next slide. Thanks. Now, Here's where I think most of my clients are really beginning to engage, and that is using their ACA plans to deal with what I think is the industry's #1 challenge, and that is talent acquisition. It's obviously important because the ACA has thrust staffing firms, hospitality firms, hotel, restaurant chains into more of the mainstream when it comes to employee benefits. And you have to deal with it. It's there. It's on your plate. So why don't we use it to tackle that #1 problem, which is talent acquisition? Everywhere I go, I hear the same story, and that is there are just too many job orders to fill. And I can't expand the labor market for you, but what I can do is show you how to use your ACA plans to make yourself a more appealing employer to the candidate pool that you have. There are multiple factors that are converging that are, I think, just going to intensify the competition for talent. There are good reasons why you should be taking a look at your ACA coverage as something that you can leverage. For one thing, benefits, whether it's health insurance or anything else, is really less expensive than paying people more in salary because there's no payroll burden, certainly on your health insurance. You don't have to pay workers' comp on it. You don't have to pay FICA. And many of these benefits employees can take on a pre-tax basis, so it reduces their cost, and it further reduces the employer's cost by doing it on a pre-tax basis. We know from study after study that there's a direct relationship between the quality and communication level of benefits and employee satisfaction. And the reality is what the employee is paying for their benefits, even if they're paying the full amount, is more important to them than what the total cost or your cost share is. So you don't necessarily have to be paying a lot for this, but you have to be sensitive to what the employee's cost level is. So on the next slide, let's talk really about what candidates want. And we know from multiple surveys, from multiple sources, that there is a huge disconnect between what employees say they want and what candidates want, and generally what management thinks they want. I've seen this throughout my entire career. So when we go to the surveys, we see, for example, that certain benefits can actually be more enticing to a candidate than more pay. And you can see we're talking about surveys from Indeed and Monster, SHRM, a number of different sources give us this information. So we're going to study on these next coming slides what candidates and what employees tell us they actually want. So on the next slide, David, thank you. We know that medical benefits are really, really important. According to staffing industry analysts, there are less than 10% of temporary workers that are uninsured for health insurance today. Less than 10%. Now that means they're getting coverage somewhere. Now we've always known that a lot of them have other coverage available, whether it's through a spouse, maybe they're former military, but you have a lot of employees that simply don't need it. Then you have a small percentage that are buying it through you. But when you add up all of the employees that are buying coverage somewhere, including through you, there's less than 10% left over. Monster tells us from multiple surveys they've done that health insurance is actually the #1 most important benefit for a candidate. 32% of candidates rate it as the #1 desired item in looking for a new job, and that's more than double the percentage that are looking for a pay raise. We know HR professionals rate it as their top way to attract and retain talent. And we know employees understand that it is an expensive item, but it's needed. Now, the lower the employee's income, the more important health insurance is to them. So if you're in the light industrial or commercial staffing business, this can become a major recruiting tool for you. Moving on to the next slide. Thank you. So wages haven't been moving up significantly. We don't expect them to really continue or to bump up a lot. So all of this really kind of combines to make low cost or no cost benefits, if you will, something to use to really leverage talent acquisition. Again, getting back to these surveys, and I think it's really important to pay attention to the surveys. And again, they come from multiple sources. This is not just one survey. There's really maybe a dozen or more total surveys that tell us pretty much the same story. We know that having employee benefits increases things like employee loyalty. It decreases turnover. It can help you really create a more engaged employee. And of course, right now, the whole buzz in human resources is trying to keep your employees more engaged. It can enhance your cultural message. There's just a whole host of things that having some employee benefits and the right employee benefits can do. And note that last bullet item on this slide. Employees actually rate improved health, dental, and vision insurance ahead of things like more flexible hours, more vacation, really any other perk. So let's dissect this a little bit further, and let's talk about the fact that we all know we have really a multi-generational workforce today. And the biggest proportion of people in the workforce today are millennials, and they're growing as a proportion. The second largest proportion are Gen Xers. Combined, they make up about 2/3 of the workforce. Number 3, which is not very far behind in terms of percentage, but they are beginning to fade, and retiring, and the older ones are dying, and that's baby boomers. There's a very small percentage left, and we call those traditionalists or silents. And these are employees that can really be cross-generational. In other words, they could fall into any one of these age groups. But they're very quiet, they're very traditional in their approach, they're pretty happy with whatever the employer offers. But millennials and Gen Xers in particular have very distinct things about them that we need to pay attention to. The next generation that's coming up, we're calling Generation Z. And while we really don't know enough about them yet because they haven't begun to hit the labor market and tell us what they want, we suspect they're really going to follow in the footsteps of millennials. So let's look a little bit at what each one of these generations wants. Well, millennials, we know, really are the digital generation. They want everything on a smartphone app. They certainly want everything online. They want it their way. They like choices. They like portability. And they want things like decision support tools. Now, if we look at Gen Xers, they have a lot of similar characteristics on the next slide to what millennials want. They do value medical substantially more than young millennials, but about the same as older millennials. Prescription coverage is more important to them, and just like millennials, they like voluntary programs because voluntary programs allow them to kind of customize what their benefit program looks like. Baby boomers on the next slide are the ones that have the highest interest in medical insurance of all, and that's as it should be expected because the baby boomers as older workers tend to have more healthcare problems. But the older baby boomers all of a sudden have an interest level that really drops off, and that's because they're either on Medicare or they're approaching Medicare coverage, and your plan is still important, but they probably got their eye on retirement. Their interest in voluntary programs is not nearly as high as millennials and Gen Xers, except for life insurance. And life insurance is extremely important to baby boomers. So how do we put this all together? How do we use this? Well, first thing I would advise you to do is just really know your audience in terms of the demographics. I would have your broker do some type of a demographic analysis showing you what percentage of your workforce falls into which category. Analyze it by gender, because knowing what percentage of your workforce is millennial versus young baby boomer, male versus female, your average age and so forth, really is valuable in helping you to determine what kind of benefits to put together. This is really important because the reality is most benefit plans, most health insurance plans out there today have been designed by baby boomers and with baby boomers in mind. And as we've seen, the younger generations, the millennials, the Gen Xers, have very different opinions, viewpoints, and needs than baby boomers. So have a benefits package, not just an ACA strategy, I guess is what I'm saying. And consider sharing costs a little bit with your employees. It doesn't have to be much, but look at where are you spending benefit dollars. I know a lot of staffing companies offer paid vacations. For example, there may be things that you can trade that don't cost you any money. But if the ACA mandate goes away, we've already heard from a wide audience of staffing companies, particularly the nationals, and 70% of staffing companies plus already say they don't plan on dropping coverage. And that's because the dialogue is beginning to shift toward how can we use ACA coverage to attract and retain talent. And frankly, taking anything away in the workforce today is very problematic. So think about options in your benefits package. I think that is an enormous thing that you can do, and communication is so very important. So we're going to actually look at how we might want to pull this together. And for those of you that have skinny plans, skinny mech plans, I begin there. Realize that really beyond compliance, there's just no value to the skinny mech plan. So if nothing else, lower the price of your skinny mech plan. There are vendors out there today that, as I mentioned early on, can do skinny mechs for as low as $4 a week. Give your employees a raise. If you're paying for a skinny mech that's $60, $65, $70, $75 a month, you can switch vendors and give those employees a raise. Look at increasing the benefits under your mech and maybe turning it into a mech plus. And I know a lot of you have that, but you can add things like office visits and prescription drugs, keep hospitalization out of it, and you can still have a very affordable and very valuable benefit package or health insurance plan for your workers. And again, I think options are important. You can do things like add indemnity plan options, dental, vision, and so forth. And do look at technology options to help you communicate and enroll this. I actually want to do a case study starting in the next slide. And this is an actual client of mine, and we're going to call them ABC Staffing Associates. And just to give you an idea how this all might come together, their socialized cost for ACA is about 15 cents per billable hour. Now they took a bill rate increase of 40 cents per billable hour, but their actual cost is 15 cents per hour. So that, this has been, like a lot of staffing companies, a profit center for them. Moving forward, they have a couple of options. They can either keep that 40 cents an hour or the 15 cent per hour budget, or they can spend the full 40 cents per hour that they're collecting for ACA surcharges now, or anything in between. Their choice has been to increase from 15 cents an hour billable hour spend to 20 cents for 1 year. And they're going to use that 5 cents per billable hour to invest in a benefits administration technology, which doesn't cost much, about a penny and a half per billable hour. And then they're going to take the 3.5 cents per hour and put that into a MEC, actually a MEC Plus plan. They've been paying, or not paying, they've been charging their employees the full cost of their skinny MEC, which is $65 per month. So looking at the next couple of slides, we're going to show you how this is going to play out, or how it's designed to play out. So first thing we're going to do is reduce that $65 per month skinny MEC down to $22 per month. So those employees will get an immediate pay raise of 33 cents per hour. They're also going to automatically enroll new hires who don't choose a plan into the skinny MEC, and they're going to pay, the employees are going to pay the full cost of it. So if the employee opts out or enrolls on their own, that's fine. If they don't, they're going to automatically enroll them. We're going to add what we call a MEC Plus plan, and the MEC Plus has the same benefits as the MEC, but it adds coverage for office visits, prescription drugs, urgent care, and x-rays. Now the cost of that, total cost, is going to be $89 per month. The staffing company is going to pay a little over $4.50 per month toward that, so it's not a big amount, but that's at 3.5 cents per billable hour we talked about that they're going to pay, which is going to bring the employee cost for that plan down to $19 a week. And keep in mind the old Skinny Mech plan was $15 a week, so for $4 a week the employee gets a significantly better benefit program. That plan, like I said, has no deductible and covers things like office visits and urgent care. We're going to add a hospital indemnity policy, which provides reimbursement for certain hospital expenses, so much per day. You've all seen those policies out there. They're heavily marketed. And that's at approximately $4 per week. And then there's going to be a package that will provide hospital indemnity, dental, vision, life insurance, and disability for less than $20 a week. Now that package is out there whether the employee enrolls in a medical plan or not. And keeping in mind that a lot of your employees come to work, they don't need health insurance, but those packages programs can really add value to your benefits package. So going to the next slide, let's look at how this looks for the employee. They're going to have a number of options. First of all, they can just waive out. They don't have to take coverage at all. If they have coverage through a spouse, they're ex-military, they're set, that's fine. Or they can choose the Skinny Mech. They can add the indemnity and have the Skinny Mech with an indemnity. They can step up to the Mech Plus to cover their outpatient and prescription costs, or they can even add the hospital indemnity to the Mech Plus to give them some hospital coverage. They can add dental and vision, or they don't have to enroll in dental or medical at all, excuse me. They can just buy the package of dental, vision, life insurance, and short-term disability. Lastly, and of course we haven't talked a lot about it, and we all know that not many staffing employees take it, they still have the MVP plan option that's there, but it's a high deductible. We all know they tend not to be very attractive unless you're in professional staffing where you've built an MVP plan that's really there to be more comprehensive and attract those high-end workers. So this way the employee is really offered these options when they're first onboarded. They can enroll or not enroll. There's no real in-depth benefit data being handed out, no 10-page brochures. There's a laminated one-page flyer available. But when the employee is onboarded, they simply go online. They do a very brief enrollment or selection of either enrolling or not enrolling. And then once the employee actually gets put out on assignment and payroll deductions begin, coverage goes in force. Now, in between those times, the employee can make changes if they want, but there's no more touching the employee from the branch point of view. The employee's been onboarded, they've made their decisions, or they've been automatically enrolled if they fail to make a decision, and then the employee has a responsibility of making contact with the benefits administration system if they want to make changes. And if they don't, then coverage is simply activated at the time that first payroll record shows that they've got a new employee coming on board. The employer still has to approve all enrollments and changes because that's a fiduciary responsibility. But that can be a weekly report that just says, here are the employees that are going in. Do you approve? Yes or no? And it's click a button. And that's because of the use of the technology allows that to happen. We get away from having to make that offer of coverage down the road and when the employee becomes eligible. The benefit administration system, by the way, captures email addresses and text or cell phone numbers, excuse me, and texts the employee or pushes out email, depending on what the staffing company wants, reminders about when coverage is going to start or during open enrollment or when open enrollment is coming on, or things that are built into the benefits package that the employer chooses to want to remind the employee about. So we really enhance the communications through technology. It's not just a great way to enroll and make changes, but it's a great way to let the employees remember how valuable their benefits are, when enrollments, open enrollments coming up, and so forth. With this particular system, the ACA reporting is really all automated because all of the data is captured into one source and not integrated from multiple sources. So you can literally have your ACA forms spit out at the end of the year without having to compile data from different locations and have a lot of manual work involved. We do use bilingual communications because we do have a fairly significant Hispanic population, and I think that's pretty standard. So when you are doing your communications, just a reminder to use multiple media channels because we do have people who learn different ways. Benefits administration systems, just as a reminder, I mentioned it earlier, are not the same thing as online enrollment. Online enrollment systems are systems provided by the insurance carrier, and they enter the enrollment directly into that insurance system. The benefits administration system can gather all that information and more and feed it directly to the insurance carriers. And if you're going to go that way, and we do really strongly recommend you look at these new technologies, and they're not really new, they're just being very popular. Find one where they're going to do enough hand-holding so that if you don't have the IT resources on staff, they're going to be able to support you. And again, I would make the offer, if you don't know who those are, we do, make sure you reach out to us, we'd be happy to tell you. So, last couple of slides, what do we do now? Well, I think part of this is just a different mindset. Look at your ACA plans in a different light, particularly if your SkinnyMac plan is costing you anywhere north of $30 a month. I encourage you to look for a lower cost SkinnyMac provider. They're out there. Now, an exception to this is if you're using your SkinnyMac in your MVP plan as one program wrapped together, then yeah, you can justify a higher SkinnyMac premium because the SkinnyMac premiums are really supporting, in all likelihood, your MVP premium. So I get that. If you're not offering a MEC Plus, I would get quotes for that. You should see MEC Plus rates anywhere from under $100, around $90 per month, up to $200 a month, depending on how many people you can enroll and all the things that you build into the plan. Make sure your indemnity plans are compliant. Remember, an indemnity plan does not qualify as health insurance under the ACA. And something that I don't note on the slide, but I should make a note of, and that is indemnity plans do not satisfy medical support orders, and that's because they're not health insurance. The main thing about indemnity plans is make sure they complement what other health insurance plans you actually do. On the next slide, I want to make a comment about standalone MVP plans. And by that, I mean MVP plans that are sold by themselves without a MEC or any other product. They can be very problematic because they carry unlimited risk for the insurance company, and they can either be extremely pricey or they have to be underwritten to become affordable. But the biggest problem there is that if they're not combined with a MEC plan, there's no underwriting profits from the MEC to support them. So we're not a very big proponent of these standalone MVP plans. A lot of the standalone MVP products that are on the market are the ones that have run into financial problems. We don't use them. We don't recommend them. Think of 3 different glasses of water compared to a pitcher of water, if you will. And what the water represents claims. If you've got claims being paid out for a MEC plan, an MVP plan, and a MEC Plus plan, and they're standalone, why not just combine those into one, and you have lower administrative costs, you have lower overhead, you have streamlined underwriting. There's just a lot of advantages to that. So we're going to wrap it up. I've got 1 or 2 slides left here. Look at combining all of your ACA plans with one carrier if you're not doing it. Candidates for that are staffing firms that have 50 internal staff or more, and I'm talking about including your internal staff plans. And then the next slide, let's just kind of close the door here with questions. I'm sorry, I actually thought I had another slide after that. So I realize because of the technical problems, I rushed through some of these slides pretty fast. We've got a few minutes. David, do you want to open this up for questions, or do you want me to simply leave this with my information if anybody has questions, which is on the screen now?
Thanks, John. No, a couple things. We have had one question come in so far, and so for everybody else, if there's anything else you'd like John to answer while we're on the line today, please feel free to use the question window. And John, before we read the question, this is a lot of great information, but I want to make sure everybody on today's call understands your role and what your company does. So if I know we don't do sales pitches on Lunch with Haley, but I think it is important for people to understand how assurance plays in all of this that you've discussed today. And so if you wouldn't mind just giving the a quick overview of how you guys help.
Sure. Assurance Agency is the largest insurance broker for the staffing industry. We're members of the ASA and really practically every staffing association out there. I'm an employee benefits consultant and ACA insurance broker that works only for staffing companies. And my role here today is really just educational. I'm not here to pitch myself or my firm, but that's what we do. We probably have a portion of the audience who knows us, maybe even be clients. I haven't seen who the audience is, but that's who we are and what we do.
All right, thanks, John. And we have a question come in, and I'm going to read this because it deals with some things that I don't know much about. So, John, hopefully you do. The question that was asked was, how do you suggest dealing with QMCSO, Qualified Medical Child Support Orders, that require all coverages, which equates to MVP coverage, which is good in the judge's intent in the child support family court, but in truth is not affordable by the employee? How does that fit into the competitive advantage context of today?
Well, it's a great question, and I guess it really speaks to what options you're making available to your workforce. If you have unaffordable health insurance, or even if you're talking about a full package, you're going to lose that employee. That's the biggest problem. So I'd look very carefully, first of all, at what options you're offering to the employees. I don't think any QMSO really requires you to offer anything beyond what you're offering. But as I said, there are really low-cost options out there today. There's major medical MVP plans for $150 to $200 per month, and if you have a very pricey plan, you need to look around. I think that's probably the issue, but ultimately you have to comply with that support order.
Okay, thanks. Another question that came in: if you have employees elect coverage in the onboarding process, can you do this before their start date?
Yes, you can. Absolutely.
Okay, and we had one additional question, which is specific for we're a boutique firm. What are the minimums for coverage with your company? And if you'd rather address that offline, I will share that information after the call.
Yeah, it probably should be addressed offline because it depends. It depends on a lot of factors. So there's just not one answer. And by the way, I'll go back to the medical support order one other time, and that is, depending on the state you're in, you may not have to have an MVP plan satisfy that support order. That's one of the big advantages to these MEC Plus plans. In certain states, it won't work. Texas, for example, requires hospitalization. New York, I believe, does too. But other states will take those MEC Plus plans. As long as you have that built in as an option, that'll be much more affordable to your employee and certainly to your organization than a full major medical.
All right. Well, John, I want to thank you very much for taking your time out today to share just a wealth of information about not just ACA, but how companies can learn to look at benefits differently. I'm sure you're right when you said that virtually everybody on today's call is struggling to find enough qualified candidates and to retain qualified candidates for all of the job orders they have. And if you can turn your benefits programs into another source of competitive differentiation, and at the same time, it sounds like you may be able to reduce costs, it seems like a very smart thing to do. But I know if I was in the shoes of most people on today's call, I would call someone like you to help me figure out how best to do that, because today did remind me this is still complicated.
It is.
All right, and if anyone does need to reach out to John, please don't be shy. Call him, take down the email address. We also will be posting today's recording and the slides on the lunchwithhaley.com website. And John, thank you very much for being part of today's event. And for everybody else, we hope to see you at our next Lunch with Haley event. In fact, our next event is actually going to be a demo next Tuesday, and we're going to look at a technology to help increase the efficiency of communication with visitors to your website using chatbots. So from all of us at Haley Marketing Group, thank you very much for being part of today's Lunch with Haley webinar.